NASDAQ and S&P. Randy Warren, CIO at Warren Financial Service, is still with us. Randy, what is going to drive the trading day in the U.S. this morning? Is it durable goods? Is it housing?
Well, certainly those numbers are important. All the economics are numbers that come out are important. But, you know, typically 5 minutes or 30 minutes after the number comes out, it's already forgotten. Probably what's going to drive the day is what's happening in Europe. You know, some of the earnings that are just now starting to come out will become much more important as a couple of weeks go on. As we get into about the second week of July, those earning numbers will become very important to the markets. And maybe the United States can temporarily put aside what's happening in Europe and focus on, you know, our own numbers that are coming out of corporate America, which probably are going to be a little weaker, but have been strong over the past couple of quarters.
I was going to say maybe now isn't the time to focus on earnings in America. There's suggestions that corporate profits have in fact peaked, that this earnings season may be the first after, I think, 11 straight that we see a decline. What's your view?
Well, there's no question that profits are at a peak in their cycle. They may start to come down, but valuations are also very low. So you've got super high profits and very low valuations. You know, those two things need to come together, both of them. Both of them need to move. Prices need.
Do you expect another round of quantitative easing?
No, I don't think we expect another round of quantitative easing. I think it's been pretty clear from the Federal Reserve that the last round of quantitative easing didn't have a tremendous amount of effect on the markets. It had more of an effect on commodities and maybe on the S&P 500 than it had on the economy. So, you know, the only way we're going to get more quantitative easing in the United States is if there's more quantitative easing in England and in Europe and places like that. And, you know, the dollar just doesn't want to get too strong. So, you know, the United States needs to keep the dollar from getting too strong.
You've seen the impact, of course, that stronger dollar has had on corporate earnings, taking some of the wind out of their sales.
Except, Warren, that, you know, the stronger dollar here is going to help with oil, isn't it, and lower gas prices. So, I mean, there are some offsetting benefits here, and the one thing that's going to help corporate profits and the consumer is lower gasoline prices and lower oil prices.
Yeah, low oil prices are great. I mean, it's been a real boon to the economy over this summer. I mean, they peaked somewhere back in April, and they've been coming down ever since. And, you know, consumers are really benefiting at the pump. As a matter of fact, the United States, you know, with all the additional oil that's been found here in the U.S., the Wall Street Journal had an article out early this morning just saying that by 2020, the dependence on the Middle East will be cut in half.
Right. Important.
Yeah, China's now the biggest exporter market for Saudi Arabia. It's amazing. Randy, good to see you this morning. Thanks for joining us. Randy Warren, Chief Investment Officer of Warren Financial Services. That's it for today's show.
Thanks for tuning in.
Sport Box is coming up next.
Yes, it is. We'll see you back here tomorrow.
Yeah, we'll do it again.